So this was basically, the first slide which we are supposed to go through, okay, before the start of the course. But I am taking you because now you can understand what we have done. Okay, fine. So there are three key approaches. There are three ways through which you can do a business valuation. Okay, fine. So we have learned relative valuation. That's also an approach to value. Okay, fine. So so this is income based, asset based, and market based. So there are three approaches. Okay, so we'll come back to what does it mean. Approaches to valuation. The first method is called discounted cash flow valuation. Okay, relates to valuation of an asset to the present value of the expected future on that asset. So what it says, I'll just read it out again. Discounted cash flow valuation relates the value of an asset to the present value of the expected future cash flows on that asset. Which means, like suppose if you have an asset, for example, you have bought a company share, so that's an asset for you. You buy a building, it's an asset. So any asset which you buy, you can value, what should be the value. Today, suppose I own a house and I want to sell it. So I have to value it. So I look around, the recent kind of transactions which have happened, okay. So which is based on relative valuation, which we have already done. So suppose I want to sell my house. So what I'll do, I'll go to magicbricks.com and see that the house which I own, which is suppose a villa, a 360 yard villa. So I look that what prices, some of the houses have been sold, or if some people have advertised for selling. So what they are demanding. Okay. So it gives me a fair idea, what should be the value I will be able to get. Now all those values are slightly inflated in the real estate sites, because suppose I ask, say 1 crore. Now nobody will going to give me 1 crore. So people are going to say negotiate and give you say 80 lakhs, 90 lakh rupees. So the values which are given on the sites are about 10% to 15% inflated, because then there will be a valuation discount or negotiation which will happen on the table, and you will come to the right value. Okay. So that is called the relative valuation. Similarly for companies, which we are doing, like cement company or whatever companies you have chosen. So you do the valuation on the basis of multiples. Okay, whether a PE multiple or a EV to EBITDA multiple or whatever multiple you use to calculate the value of an asset. Okay, fine. Like we did, precedent analysis, the transaction analysis, where somebody was trying to purchase another company. So he looked, at in past, what are the transactions which have happened and at what prices they have been, concluded. Okay. So then applying those, kind of deals which have happened in past, we arrived the value of the company, the new company which we are able to, looking for what should be its value. Okay. Now that's called the relative valuation. But the most important valuation technique is the technique which is on your slide, which is called the DCF method. Okay, fine. The most appropriate method, because I told you when you are doing valuation on the basis of relative valuation, because the markets are not efficient. They are, not pricing the asset at the right price. So at times when the markets are overpriced, and the markets are underpriced, so market will keep fluctuating. Okay, and they will be never valued at its right price. So either they are overvalued or they are undervalued. So relative valuation is based on the valuation which we are getting from the market, which itself is not the right price. Okay, fine. Because today suppose Reliance is trading at 1400. Tomorrow it may correct about 20%. Say it comes to around 1100. So which is the right value, 1100 or 1400? So we don't know. Because at time the prices are fluctuating. It from 1400 to 1100 in a matter of just 1 month time, the share price can correct. Okay, or the share price can go up. Like Zomato has gone up by say 20%, or Maruti has gone up by say 15% in the last 1 month because of the GST announcement. So what is the right price? That is not given by the market and not being given by the relative valuation. Okay, you get a good idea from the relative valuation, but you don't get the exact value. So from how we are going to get the valuation right? How we are going to get the right value of an asset? The answer is the DCF valuation. Okay, so DCF valuation. So that is the right mechanism through which we calculate the value. Okay. Now suppose, for example, I just give you an example to give you, how it is calculated. From a analogy, not from, doing this cash flow technique. Suppose I have an asset, I have a building. Assume that it is a commercial building. Okay. I have a shop in a mall and I am trying to sell it. One would be to look at the prices at which others shops in the similar locality have been sold recently. But I want to do a discounted cash flow technique to value my, the building. Now suppose I am getting a rent, okay, of suppose 10 lakh rupees per annum. Okay, maybe 12 lakh, but I am just keeping it 10 lakh, so it's a round number. So how much I am getting? 10 lakh rupees per year by owning that asset. Okay, and now assuming for a very simple reason that I will get 10 lakhs forever. As long as I hold the asset, I am going to get 10 lakhs. Or even if somebody buys from me, he is going to also get 10 lakhs. Because suppose I sell to someone, he is also going to get 10 lakhs. We can even complicate that after every 3 years, it will go up by 10%. Isn't it? Because the house which, or the property which I am owning, the rentals will also increase over the time. Isn't it? The rentals will also go up. I am going to ask some questions. So today the rent is 10 lakhs. Maybe after 3 years it is 11 lakhs. So I can even presume that. But for simple reason I am saying it remains 10 lakhs. Then I can complicate it, even calculate the value of an asset, even if it is going asset. Okay. Now it is giving me 10 lakhs. Suppose, I have an opportunity of almost identical type where, if I invest my money, I may get 10% return. Suppose I have an opportunity similar to, holding this asset. Okay. And if I have some money, I can put it on rent, or on some, I will get some return. Assuming it's a fixed deposit, okay. Assume. Suppose it is giving me a 10% return. The bank is going to give me a 10%. Now tell me how much is the value, which will give me equivalent to the value of 10 lakh rupees per month. Now 10 lakhs I am getting rent from the house, from that building. Okay. Now what should be the total value I should have so that I can replicate my earnings which I am getting today? आज मेरे पास कितना पैसा होना चाहिए अगर मैं उसको 10% में लगाऊं तो जिससे कि मुझे उतना ही पैसा मिल रहा हो, रेंट जितना भी रेंट मिल रहा है उतना ही हो जाए. 1 crore. Suppose I have 1 crore. What I am going to do? I am going to deploy 10%. How much I am going to get per annum? 10 lakhs. Now suppose somebody says that I am willing to pay 1 crore rupees for this house to you. I will immediately give it to him. I say, okay, I will sell you. Because the moment you will give me the money, I am going to give it to the bank, he is going to give me 10 lakh rupees. So I am not losing out anything, isn't it? So उस house की value कितनी हुई? 1 crore. Isn't it? The value of the house which I am owning today, which is giving 10 lakh rupees of rental, the value is 1 crore, because the moment I get 1 crore, I am going to deploy that to someone I am going to give, and he is going to give me 10 lakh rupees per annum. Have you understood? समझ में आ गया? Should I explain again? Are you listening? What's your name? हाँ. दिशा. अच्छा ठीक है. Okay. Have you understood? Should I repeat again? एक बार दोबारा बता रहा हूँ. Please सुन लीजिए. अगर आपको ये समझ में आ गया तो आपको DCF भी समझ आ जाएगा बड़े आराम से. It's as simple as that. Suppose I am owning a asset, a building. I am owning a building somewhere in Gurgaon. It's in mall, okay? And if I give it on rent to someone, I am going to get some rent. Suppose that rent is 10 lakh rupees. I have given to someone about 2 years back. I am getting 10 lakh rupees. Okay, fine. Now somebody approaches to me. He wants to buy that showroom or the building from me. that building which I own, he says, I want to buy it from you. What price should I pay you? Or what is you expecting? Fine, it happens like this, somebody approaches, he says, I want to buy, so what is your expectation? Sometime I may say, okay, how much you can pay? These are the things which happen. So, now I am getting 10 lakh rupees. Okay. Now, suppose I have a similar opportunity, identical opportunity, but here I am converting my real estate into cash because I will be getting some money from the other guy and putting that money in a deposit or an investment, which is going to give me 10% return. Okay. So I know this guy is going to give me money, I am going to just put that money in that 10% return. Now I am getting 10 lakhs. How much he should give me so that it generates equal amount of money which I am getting today? Yashika? Sorry, sir. 1 crore. So if you give me 1 crore, of course you can't give me, I know, that's why you are baffled. So 1 crore if you give me, so I am going to put it in a deposit, I will get 10%. So what is a 10% of 1 crore? 10 lakhs. Improve your mathematics. So if I get 1 crore, so should I sell my asset? So what is the right valuation of my building? 1 crore or more or less? 1 crore. So it's based on, what value I am going to get. When I deposit that money somewhere, I am going to get 10% return and I will accept 1 crore. So the valuation how much? 1 crore. So now just read this again and then I will elaborate further. Look at this. Value of business here. Now think it's a value of the building which I am owning. So every year I am getting some money. Every year I am getting cash flow. CF stands for cash flow. Okay, I have to convert what I am getting as cash flow. So here I am getting cash only. Somebody is giving me 10 lakhs, it's cash, it's equal to cash. So cash flows I am getting. Every year cash flows. Okay. Now you are going to give me cash every year. Okay. What I am going to do is I am going to calculate the present value of cash. Okay. Fine. अगर वो पैसा मुझे आज ही मिल जाए सारा, at a certain rate I am going to discount those cash flows. Okay. And suppose it is 10%. Okay. So I am going to discount whatever cash flows I am getting at 10%. And I will get my value of an asset. And it will be like 1 crore rupees. Okay. I am just again going to repeat so that I understand a little bit. So what we do is that whatever, now somebody asks you what is the value of an asset using the DCF technique. Okay. So somebody tells you to calculate the value of an asset based on DCF technique. How do we value? Now, a similar question was asked to my son who went for an interview about 7, 8, 10 years back. I don't know how many years back. So he came to Gurgaon from Delhi to attend an interview, and the guy asked him a question. Tell me, what is the way how we value an asset? How can we value an asset? So my son was having no idea. Like you people have no idea. Okay. So please have an idea so that if the similar question is posed to you, you can answer it. And if you answer this, the guy will say, okay, come and join the company next day. So he's not going to even spend a half a minute thinking twice. So please listen. Now the value of an asset is nothing but all the cash flows which I'm going to get, I'm going to discount at a certain rate. Okay? Fine. And in this case, I told you 10% because that 10% I'm able to get it. So depend upon, how much you're going to get. So discount that at a certain rate. I'll tell you how the rate is arrived later on, how I arrived at 10%. So discount all the cash flows at 10%. Whatever cash you are going to get, discount them at 10%. And you are going to arrive at the value of the company. Now, suppose, for example, first year, how much I am getting? 10 lakh rupees. Now, when I am getting? The end of the next year. If I get today, so I divide by 1 10 lakhs divided by 1.10, okay, raised to power 1. Just do that on your calculator. 10 lakhs divided by 1.10, तो कितना आ जाएगा? 11 लाख क्यों हो जाएगा? कम हो जाएगा ना? नो हाँ 9 लाख हो जाएगा. हाँ 9 लाख 9,000. So do the right calculation, do the right maths. How you have done it? 1.1. So 10 lakh divided by 1.1. How much you get? 9 lakhs. 9 lakhs 9,000. Now if you put 9 lakhs into bank and earn 10% on it, it will become 10 lakhs back. Isn't it? Fine. अगर वो 9 लाख रुपए है, मैं आपको 10 लाख रुपए 1 साल के बाद दूंगा और आप बोले मुझे 1 साल के बाद नहीं चाहिए, मुझे आज ही दे दो आप, तो आज मैं आपको कितना दूंगा? 9 लाख 9,000. If I give you 9 lakh 9,000, 9 lakh 9,000 है ना? If I give you 9 lakh 9,000, what you are going to do? You are going to put that in a bank or to someone, he is going to give you 10 lakh rupees after 1 year. So whether I own this asset now or sell it at say 9 lakh today, I am going to get 10 lakhs. But here I am going to get 10 lakhs every year. Okay. So just to explain for 1 year phenomena that I am discounting, suppose that asset is just for 1 year. एक asset है मेरे पास जिसकी life 1 साल ही है. Please here, there is an asset, just to simplify, there is an asset whose life is only 1 year. And I am going to get 10 lakhs from that asset. Okay. So somebody says that I want this asset from you. I'll say, okay, give me 9 lakhs 9,000 and take this asset. So he'll take it. What I'll do, I'll put this 9 lakh 9,000 and give it to someone, and he'll going to give me 10 lakhs after 1 year. So, which means whether I own the asset or I sell it at 9 lakh 9,000 today, I'm not going to get, I'm not going to, lose anything. So the value of an asset is nothing but the present value of the cash flow, isn't it? But have you got it? So that is called the DCF technique. As simple as that. Now here, the asset has a long life. So you are going to get cash till eternity. Now, as long as I hold this building, I will keep getting 10 lakhs. Fine. So I want to calculate the present value of that building. So what I'll do, I'll discount all the cash flows which I'm going to get till my life, till not my life, till the asset lives. Okay. The asset has an infinite life. Okay. Assuming that. So I'm going to use the discount of 10% and then arrive at all those values and add them up. For example, let's do another calculation. Suppose the life of the asset is 2 years. Then I can say 3 years, 5 years, 10 years, like this. Suppose the asset life is 2 years. Okay. Fine. So now I'm going to get 10 lakh rupees for the 2 years. Tell me how much money you are going to give me so that I hand over the asset to you. कितना पैसा आप मुझे दोगे जिससे मैं बोलूँगा ले जाओ ये asset. So how much you are going to do? Next year, first year 1 lakh divided by 1.1. Next year 1.1.21. So 1.1 raised to power 2. So that means it will become 1 rupee will become 1 rupee 21 paisa. Okay. So the next year it will be 10 lakhs divided by 1.21. How much you get? 8 lakh 26,000.
नहीं सर 17 लाख दोनों को ऐड कर दो.
हाँ दोनों को ऐड कर दो तो 17 लाख. So वैल्यू कितनी होगी? If you give me 17 lakhs, have you followed? इसको सुन लो आराम से. It's very good. Okay. So people from Uttarakhand is going to learn a lot of things. Okay. Fine. So have you got it? Now he got a value of how much? 17 lakhs something. 17 lakhs?
35,000.
35,000. Should I show you that on a Excel sheet? Okay. Okay. So here, fine. So what I do is I use the formula straight away. So I use the present value formula. Okay. Just see this formula. Rate is how much? 10%. Now the future value is how much? This. 10%. And NPR is 2. Present value. Okay. तो अब देखते हैं, अब समझ आ गई. ओके, सो पहले देखते हैं पहला साल. अभी फिर एनपीवी शुरू करूंगा तो वो भी आ जाएगा. ओके, आई गिव यू अ राइट मेथड. फर्स्ट ईयर I take the present value. Okay, the rate is 10%. Okay, NPR is 1 year. Okay, and future value is this. I use it again because I think I pressed something wrong. 10%, and future value is minus this value. Okay. And NPV is 1. So this is okay. Just focus here that first year I'll get the first year present value of 10 lakhs is 9 lakhs. The next year, okay, I just do it again and choose the rate here 10%. Now the period is I'm getting after 2 years, okay, and then I'm choosing this. So I get this. So I simply add this up here. I just add up here. So that means if the life of the asset is 2 years, I am owning an asset which is I am getting 10 lakh rupees per annum. Okay, fine. And the life of the asset is just 2 years. So if somebody gives me 17 lakh 35,000, I'll give that asset to him. So it is the present value of the future cash flows which I'm going to get. I'm going to discount them at 10%. Is that okay? Have you got it? So now there is another shortcut formula where I'll get the state formula of this. So that is, I'll get the net present value. So I can use NPV. Okay. So which is, the rate first, which is 10%. Okay. Then I do the valuation of this. Fine. Is that okay? Is it right? समझ आ गया? So the value of the asset is nothing but the present value of all the cash flows discounted at a certain rate. Okay. Suppose, now do this. Suppose I am going to get this 10 lakhs for 5 years. Suppose I am holding an asset whose life is 5 years. Okay. Tell me what should be the value of the asset today. How much somebody should give me. Suppose I am holding an asset where I am getting 10 lakh rupees per annum. Okay. And I will get this money for 5 years. Then this asset is finished. Assume it becomes zero. It's like owning a depreciated asset. It will depreciate fully. There will be no scrap value. So it is, and you are going to get 10%. So tell me what should be the value?
37 lakh.
37 lakhs? 90,000. आपको मिला वो value? Okay, so now what I am going to do, I am just going to put this here again and just check. 5 years, okay. So the rate is 10% again, okay. The rate is 10% again, and I am going to choose this value. So it is 37 lakh 90,000. You said 37 lakh 90,000? ये समझ में आ गया सब लोगों को कैसे निकालते हैं हम क्या करते हैं how much cash I am going to get. I am going to decide about the rate. That rate I will tell you how it is decided. I am assuming 10%. Okay. If suppose I am going to get 10% return, then if I am going to put this asset and give me 10 lakh rupees for 5 years, then if I today somebody gives me 37 lakh 90,000, okay, then I will be willing to give him, because I can give it to the bank and the bank can give me 10 lakh rupees for 5 years. Now, just to cross check this, okay, how do we do that? We calculate annuity here. Okay, what I am doing is, I am just putting here, this is very interesting, okay. So I go to PMT here. Here I am saying, now you have given me 37 lakh rupees, okay. What I am going to do? I am going to deploy 10% and I am going to earn 10 lakh rupees per annum. So the rate is 10% and NPR is 5 years and the present value, which is the value which I am going to give it to someone, is 37 lakh 90,000. So how much I get? 10 lakh rupees? 10 lakh is I am going to get every year. Okay? This is by using the formula PMT, which is nothing but the annuity. So I am generating that, I am giving to someone and saying, भैया तुम मुझे हर साल पैसे देते हो. Okay? I don't know whether you have done this in your financial management. करा? आपने नहीं करा होगा. क्योंकि the financial management is a course subject which is done by all the students, isn't it? Yes. Financial management was a course subject. हाँ? क्या शिकायत? Marketing क्या है? ये financial management is a core subject which is all the students are supposed to do, isn't it? कोई lecture तो नहीं है? सर वो हमारे बैच का now just hold on. In 2008, listen to me, man. First time when I started teaching in 2008, when I went to a college, I was not teaching finance, so I was teaching something else, okay, some other subject, strategy. So because I am a finance guy, so I was telling about numbers to the students. So the student, there were about 60 students. He said, "Sir, why don't you take our accounts or finance class?" So they all went to the director, and I was allotted a finance subject. Now, because there were about 6 sections, so I couldn't take all the sections. So I am teaching 3 sections, and 3 sections were being taught by someone else. Okay. So I was teaching in an Excel. The other gentleman was teaching the way he has taught you. Okay. And since I told that nowadays everywhere you are using Excel in corporate world, so what is the fun of doing it manually? Okay. Now, generally the professors, they don't know how to use Excel because they are not worked in a corporate world, but now most of them know it, okay, because Excel has become very, very relevant. So about 15 years back, it was not the case. So many students, they could not understand the present value and future value because they just used the formula and they lost the concept. What you do is, you learn, please focus to me, what I am saying. You learn the subject, but you don't learn the relevance of the subject. जब आपको उसका concept ही समझ में नहीं आएगा, तो उसको apply कैसे करोगे अपनी life में? It's like school class 1 to class 12, we just learn without knowing what will be its relevance in our future lives. Okay, but the schools are designed like that. It's okay. But when you go to a college or a university, then actually you must question. You are already grown up. किसको मुझे फायदा क्या होने वाला है? How I'm going to use it in my life? So here, everything is now done on a AI or Excel base and everything. So you must learn the modern ways of doing it, isn't it? And you must know the concept. So what I have done, there are 2 concepts here which I have learned. One is to calculate what is the present value of all the money which I am going to get. I am going to discount them and calculate the present value. Another is, I get that present value, the value of the asset, I am going to redeploy it and generate again my income back to the same level. Because I think sometimes somebody says, now I own a building. Actually, I own a building in a shopping complex. Okay. Now, if I give it on a rent to someone, after now, life of any kind of a business is very small now because we have e-commerce. Today we have e-commerce. So now just think, earlier you were going to how many times you were going to a shop to buy it, and now you just sit at home and call for the Blinkit and the material will be delivered in your house. 10 minutes में आ जाता है e-commerce. So you stop going to the shops. The shops people are just sitting idle. And now they are also saying, yeah, we are ready to give them, ready to deliver at your house. Earlier, they had nakras, but now they say, hum bhi denge aapko. Or maybe they have tied up with Blinkit. The same material getting from the Blinkit is coming from that shop. Okay, but Blinkit have the godowns, from there they keep. So they source it wholesale and then give you at a much cheaper rate. They will offer you discount. With the thing which is 100 rupees MRP, they say, okay, we'll give you at 95. But they are going to charge some more money for delivering. So it virtually almost landed in the same price. Okay. So nowadays life of the business has become, different. The business has become different. It is all online. Nobody goes to shops and buys it. So I have a shop. Now the only businesses which you are doing fine are cloud kitchen, where you order pizza from Pizza Hut through phone. And so nowadays, you go to Pizza Hut, there is no sitting this. It's a cloud kitchen only. And you make an order on phone and the KFC and everything will deliver the stuff at your home. So I own a shop which I have given to Cloud Kitchen Pizza Hut. Okay. So since that is a business which they are doing, they will not close it unless the Pizza Hut closed down. Okay. Pizza Hut बंद हो जाएगा तो shop मेरी खत्म हो जाएगी. Then I have to look for another tenant. As long as Pizza Hut continues to sell pizzas through my cloud kitchen which I own, the shop I own, they will keep giving me rent. Now if I give it to someone else, after 2 years, he will come back to me and say, sir, rent to मैं दे नहीं सकता. I want to reduce the rent because nowadays nobody is coming to the shop. So I will always have a problem. Every 2 years I have to change my tenant and look for new one. I will never get higher price. I may get even discount. Whatever getting today, I may get 10% cheaper after 5 years. Okay. So I own a property. So I always have a fear that someday my rent will get stopped. So what I'll do, I'll ask someone to buy it so that I get cash and invest in an opportunity. I'll convert my asset, the existing asset with the shop, in cash and invest in a stock market where I get equivalent returns. Okay. So sometimes you want to sell your asset because you think there is some risk involved. So let me just convert this in a cash and put in a safer kind of an asset, much safer and more reliable. Okay, fine. So that's why coming back to the valuation. Now to value a company. Now we come to how do we value a company.